Hey, this is J.R. St. Julien with the St. Julien Real Estate Group of EXP Realty, and I'm here with you with my February market update. So a lot of folks are asking me the question right now, how is the spike in interest rates affecting the San Diego market? Well, stay tuned because that's exactly what we're going to talk about. In the last month, we've seen interest rates increase almost a full percent. They're at the highest level that they've been at in the last 2 years. And we're sitting right around the 4% mark as I speak to you today, which is the middle of the month, February 15th, 2022. As I mentioned, we haven't seen a 4% interest rate since 2 years ago. And based on a fairly consistent commentary from the Federal Reserve, most folks are expecting interest rates to continue to appreciate throughout the year. The last time we saw interest rates kind of spike and hit a percentage that caused an evident slowdown in the marketplace was back in November of 2018. Interest rates spiked and hit right around 5%, just a tad bit over 5%. But shortly after that, we saw the interest rates start to retreat, and they continued to do so until they hit their very low levels in 2021. So now this scenario that we're in is a little bit different because the interest rates are spiking. We just crested a kind of I would say, a new threshold. We haven't seen interest rates with fours in front of them for over 2 years. But the expectation is that these rates will continue to rise as we make our way through the end of the year. So I'm not expecting to see a sudden turnaround in the direction that the rates are going. So how will that affect the market? Well, so far what it has done, it has spurred buyer demand. Time is of the essence in the market right now because people recognize that the interest rates are most likely going to continue to rise. So it's in their best interest to lock in a 30-year fixed interest rate right now if they could by getting a house under contract. And that's what we're seeing right now. If you look at the stats for the percent of the original list price received, right now we're seeing numbers like we saw in the spring of 2021, which if you remember was one of the robust seasons of appreciation that we've seen in the San Diego market. And honestly, that we've seen in any market throughout the country. And it was happening in all the markets throughout the United States. So we're starting to see those numbers come back in right now. And that's coming in at 103.5-ish% or so, which we haven't seen the numbers like that since March of 2021, which is telling. And also from an experiential perspective, from my perspective, most of the homes that my clients are writing offers on have over 10 offers written on those homes. We're causing that increase in competition to see the price that the home actually sells at to be much higher than the list price. Unlike what most folks may expect, when the interest rates go up, the activity is going down. We're seeing the exact opposite right now. Now, the big question is, how long will that last? And to be honest, that's an unknown. I can't answer that question. But I do know that the demand is still very high. We're at the lowest levels of inventory that we've been at. I mean, we've been pretty much consistently sitting at about half a month's inventory since December of 2021. And we continue to remain in that spot. Even though we have seen more homes come to market, we've seen a drastic increase in demand, and hence the months of inventory has not increased. What has increased is the median home price. Now the detached median home price is sitting at $885,000, when in December it was sitting at $850,000. And we're seeing the median home price for attached condos and townhomes sitting at $595,000, when in December that was sitting at $585,000. So the appreciation continues, and honestly, the beginning of 2022 is looking very eerily similar to the beginning of 2021. So what does that mean if you're out there shopping for a home? What that means is you need to be serious about what you're doing. You need to be aggressive. You need to be working with someone that knows how to negotiate and knows how to work in this marketplace. It is not the easiest thing in the world right now to get an offer accepted. So you need to put yourself in a strategic position to make your offer more attractive than everybody else's offer. Now, on the flip side, if you're thinking about selling a home, you may not want to wait until the summertime to sell your property. Right now, we're seeing a spike in demand, and I believe, in my opinion, that spike is coming out of a sense of urgency from the buyers that know that they need to find a home, they want to find a home, and they want to try to do so before the interest rates get even higher. By the summertime, we may be in the mid fours to maybe even fives, who knows, when it comes to the interest rate. And that can potentially, at some point, that's going to have to slow things down because the affordability will just kind of get out of control. For every 1% that the interest rate goes up, for the average buyer, that reduces their purchasing power around 10 to 11%. So that's substantial. Now we're seeing interest rates go up and prices go up at the same time. So that's like double appreciation. So if you're a seller and you're thinking about selling your home, now may be a good time to find out, hey, what can you do? What can you potentially sell my home for? And if you want to have that conversation, I would be happy to have it with you. Outside of that, if you have any additional questions about the market, I would love to answer your questions. Please subscribe to my channel, reach out, give me a call, shoot me a message via the little messenger thing below. However you want to get in touch with me, ask me some questions. I would love to give you information about your specific scenario and help you with any of your real estate goals. Thank you for watching. My name is J.R. St. Julien with the St. Julien Real Estate Group of EXP Realty, and I appreciate your time. Take care.